Is Tesla overvalued? Hello, everybody. This is StockerFinance. I'm your host, David Troyer. Make sure to follow me on Twitter at StockerFinance for more information. So recently, Tesla's stock has been on a surge. And actually, not recently. It's been on a surge this entire year. It actually crossed over 1,000% gain this year. It has since come down a little bit today with a small sell-off here, down to 855%. And it's pretty incredible, this price surge. We recently saw the stock split from around 2,200-ish a share. Now it's at around $420 a share, a little more than that, $430 a share. And again, today we saw about a 10% drop in the share price, went down to about $420 per share. I think it actually crossed below that for a second there. So about a 13% drop today. This graph is a little old here that we're looking at. But one thing you're going to notice about Tesla is that its P/E ratio, despite even this, pullback here in the price, is 1,105. So over 1,000 P/E ratio is insane. It's hard to describe how big of a P/E ratio that is. Now, for Tesla, there's some reasons for this. It's currently valued at around $400 billion. Some people think that that is incredibly undervalued, that Tesla's actually undervalued still, and it's going to be a $1 trillion company. I've made videos about Tesla and why I think it'll eventually be a $1 trillion company. So there is a large group that thinks that. There's also a large group that think Tesla is wildly overvalued, etc. And today we're going to talk about this and answer the question of whether Tesla really is overvalued or whether this price is justified. And the first thing we're going to go ahead and take a look at here, well, we're going to go ahead and look at some numbers. So what we're going to look at is this chart here, which is slightly cut off since the chart was too big to fit on the slide. It says that what I have highlighted in yellow on the top there is total assets, and then in the yellow below it, so the second yellow box there, that is total liabilities. And what I'm going to do is take these and do a small calculation to determine the liquidation value of Tesla, also known as shareholders' equity. There's some other ways of describing it as well. So Tesla is overvalued, and that's fundamentally at least. However, there is some other reasons, and we're going to keep talking about this. So stay with me here before you're commenting saying Tesla's not overvalued. Well, its P/E ratio, as I said, is over 1,000. Its shareholders' equity is 11,381. So after subtracting the liabilities, total liabilities from total assets, you're left with $11,381. Significantly less than what the company is worth, but that's okay. And now, if we look at the net current asset value per share, I misspelled that, should be NCAVPS, using total assets instead of current assets. Benjamin Graham would famously use current assets to get a more specific number here. But what we're going to do is take that number, that shareholders' equity, and then divide it by the total outstanding shares, which is currently 931,810,000. That'll give us $12.21 per share. So $12.21 per share, that's significantly less than the $420 per share, actually a little more than that now, that Tesla is currently valued at. However, treats Tesla stock like, I guess, a commodity. And I think a commodity might be a weird way of describing this, but it's the only thing I could really think of to describe the demand that there is for Tesla stock. You see, Tesla stock is so high in demand. Tons of individuals, retail investors, as well as some institutional investors, many institutional investors want to invest in Tesla stock. Now, that high demand for Tesla stock, it's going to drive up the price since there's a limited number of shares. There's only so many shares, just like there's only so much gold in the world. And if tons of people want to buy gold, it's going to drive up the price of gold. If tons of people want to buy Tesla stock, it's going to drive up the price of Tesla stock. So kind of similar in nature, although I know those comparisons might be a bit abstract. Now, on top of this, Tesla investors are also extremely forward-thinking. And you've probably seen this when you watch, if you watch a lot of Tesla YouTubers out there. Even Elon Musk himself is extremely forward-thinking. Even the main shareholders, some of the highest shareholders on the board, they are extremely forward-thinking in terms of how they laid out Elon Musk's compensation package with this very forward-looking scenario of, okay, when you hit a market cap, you're going to get this amount of money in return, this amount of options package, etc. And so because of that, because this forward thinking, what that's doing is it's pricing in the future, even in the far future. So people are saying, okay, Tesla right now is worth, X amount of dollars. However, in the future, when it has, let's say, robo-taxis, the semi-truck, the 2020 Roadster, Cybertrucks in production, people are looking at that already and saying, okay, with that, how much is Tesla worth? And then they're putting the value on Tesla. So that is why the stock, including, high demand and forward thinking, it's driving the price of the stock up immensely. But the question still remains, is it really undervalued? So although it may be overvalued currently, overvalued, not undervalued. So although it may be overvalued currently, if it continues to beat earnings and grow, the valuation should eventually balance out. So the valuation today, if it didn't change at all, but Tesla keep growing, 3 years from now or 5 years from now, however long the time frame is, if it keeps growing, selling more cars, keeps growing its energy sector, whatever it may be, eventually that should back up the price of today. The problem is Tesla's investors are very forward-looking, forward-thinking people. And that's not a bad thing, but it does, it does drive the price of the stock up pretty substantially, especially with how much high demand there is. On top of that, there's more investors than there ever have been before. There's fractional shares now, which have, been widespread. So even if you just have a few bucks, you can go ahead and invest in Tesla. That's going to allow even more people who don't have the $400 or before the split, who didn't have, the $2,000 to invest in Tesla, are now able to invest in it and become such a popular company in pop culture, in society today, all over. And Elon Musk is such a character as well, and such a, influential individual. Tons of young people especially want to invest in this company as kind of a first step into the stock market, and that is really driving up the price as well. On top of that, we have the Tesla split, which we saw drew, definitely increased the price of the stock. Similar to what I said before, more people are now able to purchase the stock, and easy-to-use apps like Robinhood have driven up the number of retail investors. Sorry about that. Now, retail investor is simply like someone in their house. It's a regular person. Institutional investor is like a bank, a hedge fund, etc. Someone with like a big amount of money. It's like an institution, and then a retail investor is just a average person, essentially. Those are the differences between the two. And the amount of retail investors, I last saw an article, I should have posted it here. It said that during the pandemic, during this whole situation here, retail investors grew by 29%, an incredible amount of growth there in the number of people wanting to invest and trade in the stock market. Part of that is because of the massive surge we saw after the low during this whole situation in about March, I believe was the low. And then on top of that, just a lot of different things going on, of people just being at home. People are bored, people want to test out the markets, they want to try to trade stocks, test the waters, etc. So is Tesla overvalued? Well, in the current fundamental state, when we just look at the numbers, if you're just looking at the numbers of Tesla, the balance sheet, you're just looking at assets, liabilities, the liquidation value, etc., price to earnings, price to sales even, yes, it is overvalued. And that's all there is to it. It is overvalued in the current fundamental state. However, almost all Tesla investors, as I said, are pricing in the future, not the current state. So if Tesla keeps progressing towards the priced in future, then Tesla stock is not overvalued. In fact, many people, depending how far thinking and how far looking you are, you may still think Tesla is undervalued. I actually fall into that category. I'm looking, on a 10-year time span here, and I'm thinking, okay, 10 years from now, you got robo-taxis, Cybertruck, you got the Tesla Semi, full, autonomous driving is already fully out by then. Hopefully, you got the 2020 Tesla Roadster, Model Y selling, they're selling in new countries, etc. Multiple gigafactories, 4 gigafactories up and running by then. So I'm pricing all that in. I'm thinking, okay, Tesla may be a $1 trillion company by then. And this video isn't about whether Tesla is going to be a $1 trillion company or not, but to say it is currently overvalued, depending on the time span you're looking, you may not see the current price as overvalued, is what I'm trying to say. So that is very important. However, if Tesla were to miss earnings, or if it were to not meet, important goals, if it were to disappoint investors, we could see a very bigger than average sell-off, purely out of panic and fear, because the current fundamentals are overvalued. We have the PE ratio above 1,000. We have tons of retail investors, etc., investing in Tesla with the recent stock split on top of fractional shares as well, and just an increased amount of retail investors since people are more bored at home and have spare money with the stimulus checks, whatever it may be. Anyways, because of that though, we're really seeing the stock price being driven up. And if something were bad to happen, if we saw, a goal missed, some fear created, we could see a larger than normal sell-off than, a stock of similar nature because of the retail investors, because of how just human nature reacts to that sort of news. and just the panic that it might create. So that is one thing to watch out for. And I think we kind of saw that today in the 13% drop, where a big institution, or I think it was a big, large individual investor, sold off a portion of their shares. I didn't really see why they did that, but they did that, and tons of other people followed. And so you go to your account. If you're a retail investor, you say, okay, my account's down 10%. What the heck? I better sell. Tesla's going to zero. You start reading all the FOMO in the news. People panic. They start selling their shares. In reality, you know, for people who have weathered the storm with Tesla, we're pretty used to that. And long term, if you're looking at this long-term goal, with I believe a lot of Tesla investors are, it's not that big of a deal. And you probably do not believe that Tesla is overvalued in the current state, and you're not planning to sell as well. So just instantly, interesting take I have on this company, and just something I wanted to touch on of whether Tesla is overvalued or undervalued. Just with the insane fundamentals, it's a really complicated company to look at when it comes to, investor views. There's some philosophical things involved almost. It's really interesting, and I hope that you can tell me your opinion below in the comment section. Anyways, thanks for watching. Please subscribe. I know I ranted on in this video for a little bit. We'll have a new video coming out Friday, so make sure to hit the bell notification. Going to be doing a new analysis video. I won't tell you what stock we're doing an analysis on, but it is going to be an exciting one, so make sure to stick around for that. Follow me on Twitter @StockerFinance for more information and news, and I'll see you guys in the next video. Peace out.